Interesting things are happening with Nomad Foods. First off, read this disclaimer carefully and do your good deed of the day by liking and subscribing. So, let's go down here to one of the economic signals. I call it food and beverage. Performance is rather lackluster. It's the lowest performing of all the themes in this big group. 17%-ish away from the highs. So there's been some weakness in this space. So here is Nomad Foods. They're in the food business. 27% from the low, 16-ish% pullback. Okay, it could have been stronger. Here is the company's website, saving the world with better food. That's of course good. So Nomad Food is Europe's leading frozen food company and one of the largest in the world. Our portfolio of leading niche brands anchored by Bird's Eye, that basically is their business. Okay. Findus is actually pretty big in Norway, where I live. So yeah, it's pretty good, frozen food, relatively nutritious. So here is here's the chart of a stock. I did consider looking at it because we do have some support here, but the problem for Hormel is that the price targets and some of the fundamentals it had more issues than what the case is with Nomad Foods, because here you have a nice situation where you have moving average support, so the technicals are looking interesting, and you also have the fundamentals playing their part. And the more factors you have playing together for a certain directional thesis, then the higher the probability that it will play out. Obviously, it can still fail, but the odds are increased. In this case, that a bullish thesis could play itself out. Okay. So if you look here at the green 50-week moving average, it has a long history of offering some pretty good support, meaning it historically has been a pretty good risk-reward bullish opportunity. Guess what? We are testing. Well, we are very close to testing that moving average again. So that's what's happening now. That's interesting from a bullish standpoint. Historically, it's not really been that good as a shorting opportunity. You see here that the RSI is also pulled back to a level that tends to attract buyers, so that is also bullish. If we go here to the daily data points, it gets even more interesting. In this case, we have the red 200-day moving average, support. Sometimes it does fail, so we do want to see support actually play itself out. Support, major rally. Guess what? We are testing that moving average again. We are finding support. The risk reward here is pretty favorable for the bulls. Further, if you look here at the RSI pulled back to a relatively rare level. It is rare for us to become this oversold. It tends to be favorable for the bulls. This is not an ideal place to put on short, bearish positions historically, based on the literal history here of this stock chart. So the technicals here are leaning bullish. When we go here to the seasonality, so we are currently here in July, later part of July. So it closes higher 57% of the time. That is sort of bullish. But what's even more interesting is August. So it closes higher 67% of the time. And the gain is pretty astonishing. The average gain is around 7%. That's pretty darn decent. September and October are weak though, so there is the issue with September, October, but August, especially October, but August is very, very interesting. So if I were a bear, if I wanted to short Nomad Foods, I would not be that fond of one, the technicals are not in my direction, and further, the seasonality is not really attractive. And that could become favorable, of course, for the bulls. When we go here, we are below these trend lines, so that is a bit, bearish. But when you look here at the recent target prices, so the current stock price is around $27. So the latest price target here from BTIG Research has a price target of $30, and that is 12-ish% above the current stock price. So that is bullish. When we go here to Saks, they do have a number for sell. That's bearish, but they do have an A value score. So definitively, if you are a value investor, this is very, very attractive. C growth, which is decent. It could of course be better, but it's decent. B momentum, that's good, and the VGM of B. Industry rank, bottom 19%, that is not that bullish. There's no dividend, 5 billion-ish market cap company. Well, 4.6 to be specific, and the beta is somewhat lower here than the market. When we look here at statistical correlations, there's an 83% positive correlation with S&P 500 long term. Well, shorter term, well, I mean, it's not really that shorter term, but using daily data points, we have 83%. Using weekly data points, which is super long term, you have a 93% positive correlation. The thing is that the S&P, it did try to have a bit of a correction, but not much came out of it. So the bulls are very obviously in control when it comes to the S&P. But you do have the issue that the uptrend has been abnormally long without us testing one of the slower moving averages, like especially the 200-day moving average. That is an issue. But the good news is that given that Nomad is a value stock, it's down to a support level. Even if we were to see some correction in the S&P, there's an increased probability that the mutual funds will rotate out of the overbought stocks down into some of those who have been beaten up. So yeah, that's interesting. If we go here to, let's look at one of the, so this is one of the companies that I analyzed earlier. In that instance, I was, bearish because, it was just obscenely overbought and fundamentals were just crazy. But it is one of those examples of a stock that just roared higher. It went from being Looney Tunes to super Looney Tunes. But the key thing about that is that doesn't make it less appealing as a bearish opportunity. Obviously, you do want to have you want to have a stop in place and accept when you are stopped out. But when it goes crazy, when the bulls become perverse, that is when they can offer you the best bearish opportunity out there. Same thing in the opposite direction. When the bears just become obscene. They keep pushing a stock down even though it is completely beaten up. It's deep value. That is when it's becomes very dangerous to actually be a bear, and you really need to be afraid of potential bull stampede. So I think that as an example here, with Oracle, this recent move, this frankly just perversion here from the bulls, it could become a very interesting bearish opportunity. PPO is ridiculous. We haven't been this far away since literally the dot-com bubble. So yeah, I just wanted to talk a bit about Oracle because I have mentioned that one in a previous video. And this is one of the ways you can think about a position that doesn't move in the expected direction. So let's actually look at when I analyzed this one. I analyzed it on the 12th of April. So let's actually look at it on the 12th of April. So let's zoom in like that. Go to daily data points. Then we find the 12th of April. So let's zoom in a bit. So let's do it like this. So this is the 12th of April. This is how the stock looked at when I turned a bit bearish. We did actually see that it went initially it went a bit higher like this, but then we did actually see a bit of a correction. So it's not like it didn't, it did certainly happen, and we did see deeper pullback later on. But yeah, I do recommend you do these kind of things to whenever you have, if you have a position that doesn't fully play itself out, then do like a bit of an autopsy, figure out what happened. And in the case here of Oracle, I mean the bear in me really find this one very interesting at this point. So yeah, a bit of a mixed video here. You got bullish opportunity and the potential bearish opportunity.